Welcome back. Fiscal pressure and supply-side risks will continue to weigh down the Kenyan economy. Rating agency Fitch is warning that this will impact negatively the country's investment position. The agency says external debt services will rise to 25% of current external receipts in 2024, up from 16.6% in 2023, owing to the 220 billion shillings Eurobond coupon redemption in June 2024. The rating agency has downgraded Kenya's long-term foreign currency issuer default ratings to B from B+.
Fitch projects Kenya's growth to remain stable in 2023 and 2024 due to strong post-pandemic growth recovery. The agency expects the economy to expand between 5% and 6% over the medium term. Fitch is further warning that fiscal tightening, high inflation and slower global growth presents major headwinds to this growth in 2023.
So I think this is now the time to start being very clear on that, and I think certainly the view that we have in FSD Kenya is trying to integrate green finance into medium-term plans, into policy.
The latest Fitch ratings forecast external debt service to rise to 24.8% of current external receipts in 2024, up from 16.6% in 2023, owing to the June 2024 $2 billion Eurobond payment. This is premised on the government's meeting its external debt obligations of $3 billion in the fiscal year ending June 2023 through a combination of official and commercial borrowing, which includes approximately $900 million in International Monetary Fund disbursement, $750 million World Bank budget support loan, and an additional $600 million in syndicated loans from commercial banks.
No, the problem is very much now. So I felt and I missed a very strong statement about the need for the international community to come in to deal with it.
However, strong growth and continued fiscal improvement are likely to see the government debt continue to fall, but remain above 60% of GDP, and the projected 2024 55% of GDP be median over the medium term. Increased reliance on domestic debt to finance the fiscal deficit will put upward pressure on interest costs, with the Central Bank of Kenya raising interest rates in response to inflation pressures. The rating agency has downgraded Kenya's long-term foreign currency issuer default rating of B from B+ on account of external deficits, relatively high debt, deteriorating external liquidity, and high external financing costs, which presently constrain access to international capital markets.